Hi, my name's Tom. Welcome back to this ASFX TV exclusive upload. In this short video, I am going to try and answer the question that I get asked all the time. How many trades do I need to backtest? Now today, I'm going to demonstrate in Excel the difference of variance and what is the number that you need to backtest to get an accurate representation of your win rate. So I'm going to demonstrate that over a number of Monte Carlo simulations that is going to show you the difference between 100 trades and 1,000 trades, and then we're going to see why more is better. So if we start with the first simulation, we're going to start with 100 trades. Everybody says, oh, go and do 100 backtest. If you backtest 100, you'll be okay. Now, unfortunately, that is not going to be the case, and I'm going to show you why. And this is an exercise that you can do at home for yourself. I've done it with Excel, but you can do it, and I'll tell you how to do it. So what we've got here is we've got 130 simulations of trades, okay? So if I just quickly scroll across, you can see on the right-hand side here that we've got 130. Okay, so you can see that I've got all of these variations here. And what this is doing is this is simulating taking 100 trades. So you can see here we've got 100 trades. There's a random number in here. If it's above it, it gives me a loss. If it's below it, it gives me a W. Okay, simple as that. So that's how this works. And then what I've done is I've totaled how many wins we get and what that is a percentage of. So here you can see that over 130 simulations, one time, or at least once, the win rate comes out at 64%. So you may do 100 backtests or take 100 trades and think, amazing, I've got a 64% win rate strategy. Perfect, I'm really good, I can deploy this, we're going to make a load of money. Okay, now unfortunately, due to this being a small sample size, the next 100, you may go and take another 100 trades, but this time your win rate's only going to be 37%. Okay, so there's a massive disparity between them two numbers. And the reason is because there's such a small sample size. With 100 trades, you get massive fluctuations. So the best way to test this is get a pen and paper and a coin. Okay, 1 to 100. Flip a coin and count how many times it's on heads and how many times it's on tails, and do this experiment for yourself if you're not able to do this in Excel. But this tells you the huge difference between just doing 100 backtests. Not necessarily just 100 backtests, but 100 trades. If you took 100 trades and you took a 37% win rate over them 100 trades, you might think that strategy doesn't work. But this is just the reality of variance in trading, whether it's backtesting or live trading. Now, let's go and have a look at the difference between 100 and 1,000. If it's 1,000 trades or 1,000 backtests, look at the difference here. We've gone from 67 to 54 roughly, and from 37 to 46. So we've closed that gap massively from where it was between 100 and 1,000. However, there is still roughly an 8% difference between these two numbers over just, again, 130 simulations. So really, the simulations, we should be doing way more simulations. But just for this example, it gets the point across. So you can see here, whilst it's much better, we're still going to be losing 50% of the time, roughly, to 4% over a year. So we're going to still be negative. If you've got a 50% win rate, 46% of the time, you can expect around 4.5% either way of that fluctuation. So 1,000 still gives you about 9% overall across. So 4.5 either side of that. So if you've got like a 53% win rate or a 54% win rate, you're still going to have some years where you are unprofitable. And that's just, again, the laws of numbers. This is not made up. It's just maths. Okay. So that's 1,000 trades. So if you go and backtest 1,000 trades, you should still expect to have a 9% difference between your bottom end and your top end, which is still pretty big. I always think if I want to understand what my win rate is going to be within roughly 1%, so if I've got a 55% win rate, I want to know how many trades do I need to backtest or take to have an accurate win rate percentage. Now, I've gone and tried to find the answer, and the answer is here. So here is a rough guess really of the numbers. If you want your win rate accurate within 1%, you need 20,000 trades. If you want it within roughly 2%, either way, so 55% win rate roughly would be 53 or 57, you need 5,000 trades. As you've just seen, we've gone to 100, we did 100 and 1,000. So if we go down to 100 trades, we saw that just on this example, there was 27% either way. So if we just go there, look, you can see there is a difference of 27%. On this sheet here that tells me 100 trades, you get roughly 14% either way, which would be 28.2%. Okay, so then if we go to 1,000 trades, again, like we've just seen in the spreadsheet, roughly 4.5% either direction. 9, we can see on here with the 1,000 simulations that we've got that. We've got here, for example, the max win rate is 4.3. We know that we can go up to 4.5 roughly. So this just gives you a reasonable example of how many trades you actually need to be backtesting to get accurate. So my answer to the question, how many trades should I backtest? As many as you can possibly get. Go back as far as you can. The more data that you have, the more backtest, the more significance and the more accurate your win rate is going to be.